Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. There we go. I can hear us starting off. That's good. And what else do we got going on here that we can say? What do I have? There's the dollar index right there to your right. I see Janos was talking about the meta, so I got a meta chart up there too. Let's shift over to the big screen. I want to I was going to put meta into the beta too, but there it is on the big screen. What's been interesting. I've been watching it for a couple weeks now. In the sense of meta, you see they broke down. The manifold was getting very tight right there, and it broke down into the sell, and then the daily went into a daily like I don't think it was there. It wasn't there. It was this one right there that put it into the sell. And then even when they tried to bounce up, notice there were just red dots. They couldn't even get a grip on it, in the sense that they couldn't get the buyers to come in. They tried to push it up. There's the old I always like to mention the old concept on the trading floor, and that was that if you're going to take them down, you first got to take them up. In other words, you got to try to get some buyers to come in, and then vice versa. If they're going to want to take them up, they try to get the shorts trapped by selling. Making people think, oh my God, the market's falling apart. Let's sell it, and then they sell it, and then what happens is that it doesn't work out, obviously, and then they need to cover. And since we've all seen how options, listed options are not necessarily a main theme, to the marketplace, which is kind of odd to me because after almost 45, 50 years, you would think with listed options, that would be a real, it's an insurance policy. Did Meta fill the gap? It did. It did. It filled the gap, and we talked about that. Matter of fact, maybe it was Janos that asked about that about a week back. It did. It basically got very close. You can see it right there. There was the gap up, and then this brought it back down. I guess we could put a line in there, so it's about as close. I guess it's right like that. There's the line. It basically filled the gap. You have those concepts of gap theory. You hear people say, "Oh, maybe it'll be, it'll fill the gap, and sometimes it doesn't do it for weeks, and sometimes it doesn't for months, and then sometimes it doesn't do it for years." So it's a, gap theory has. I think there's some that have started putting limits on it, saying, okay, if it doesn't fill it in the first 6 weeks, chances are it's not going to fill it at all, the type of thing. So, all right, let's see if we got the meta into the beta. There it is, right there. Yeah, there we are. Yeah, and the beta was the same way. Matter of fact, it was even a week. Was it a week short? You can see here 2 full weeks. Where's that mouse at? See, it just missed it here. 3 weeks back, but we were in the sell back then, and then we go to the where we go. There we go. Here's the beta. Here's our beta. See, the beta made it into the sell that week, so it's 3 full weeks in the sell in the beta, and you can see what's that? That's 4. That's 3. So it's 8 days in a sell. And let's see how many days it is in the sell on the other. So that's 4 there. And then there's 4 there. Yeah. And now, are we really seeing today? I guess we're seeing today. There's Meta, and that is today? No, that's yesterday. So they haven't even started trading on our beta yet, the Meta. And they may, by 8 o'clock or something like that, they may start trading the beta, and it'll be 9 days. So both were in daily sells for 9 days, and and then so on the weekly, our big platform that we use every day is 2 weeks in a weekly sell, and over here it was 3. So, and I remember Janos asking that question. I thought, let's take a look and see. So Robin says, did the meta fill the gap? It did, yes. I like to probe the reverse when GA gaps get filled. Right, exact. Oh, so you think is that like a bounce back up, Robin, or what? Or at least a basing? Well, it'll base here for a couple days, won't it? Usually it does, doesn't it? Create some type of island too? GDP came out. Aha! We've just got the GDP. I'm expecting 3 point something. Where was it? Oh, really? Oh, man, I was looking for like 3.2. I really thought we were going to see 3.2. Let's take a look at see where the stock market is from that. Well, they didn't like that data, did they? There's right here where the let's do this. You can't see that. Let's go over to here. And let's put this up like that. There we go. So the number came out right here at 7:30. Let's see, right there, 7:30 and 11 seconds. They ran it up for 2 seconds. That's it, just 2 seconds. And there's 13 seconds later, and not even 8 seconds later, they break it down. 8 seconds. There's 14 seconds. Now it's down in minus, and then they slammed it. There is, that's over 2 minutes. They drove it down to there. And now they're trying to do a little bouncy bounce stuff on the upside here. So, interesting. Very interesting. Okay, now let's see. Let's answer more questions. Came out, U.S., the market consensus forecast that GDP had increased by 2.5% overall the quarter. Actually, it released data revealed growth of just, it was 1.6, and I thought it was going to be 3.2. You're kidding me. Oh my God, that's really bad. That's really, really, really bad. Holy moly. Yeah, I was looking for 3.2. I said that yesterday. I thought we were going to, Monday I said that. I thought we were going to see like 3.2. And then I thought the PCE will be a little bit more inflationary. So normally, right, you would assume that's what that first 5-10 seconds was. People thought, oh, right, interest rate cuts at 1.6. And then they slammed it. So I wonder what ugly numbers were inside there. Let's see, with the U.S. sentiment indices, this signals a slowdown. Yeah, just another 3 handles down in the S&P. 30 handles down. Because we were in the 70s, now we're in the 50s. So it's basically 22 handles down on the S&P. Oh, you mean maybe the SPY? Yep. Wow. I was really expecting better numbers. I really did. I thought that the numbers were going to come out. With Dennis Hassett, I watch his work. And Dennis Hassett is usually spot on. He was thinking it could be from anywhere from 3 to 3.5. So I figured 3.2. He's also the one saying, he's the one that's been really super accurate on inflation for a long time. He thinks that the PCE is going to be worse inflation again. So wouldn't it be crazy if that's better inflation? Then they can lower interest rates. And then the market will be happy. Happy, happy, happy. Yeah, because the market money managers are concerned about that. Let's see. Was down 33 when earnings were released. Yes. Okay. Yeah. Okay. Now let's see. Let's see what they have. I'm going to hear what they have to say. I'm going to raise the volume a little bit. So they, oh, okay. So they've already reported it, and I was reading the tape. Yeah. So the Dow's down almost 400 points. We were starting to dig our heels in and find a base. Now it's rolling over. Let's go take a look at the dollar index. See what the dollar index is doing. Boy, this should be a real confusion for the currency traders. Still on the sell when it comes to that's a dollar index. Okay, so dollar index is a third day in a sell, still pressing down. Let's take a look at the euro. I'd imagine the euro has got to be plus. It's got to be lifting up. There is the euro GBP. There's the euro. And then they spiked it, and it's down for the day just a little bit, but still in a daily buy now for 7 days now. So it's in a daily buy from this bottom in here. And it's grudgingly getting there. You can see the weekly's trying to turn, but it's just nowhere near as we're expecting. Let me go back down to the dollar index again. I want to see where the weekly is. I wasn't thinking about it hard enough. So right there. The weekly still over the manifold here. You know, see that? There's the manifold right there. It's still over it. They don't really want to. I guess, what are they thinking? Let's see. They're thinking that rates are not really coming down. I guess that's what they're doing. I mean, they've built this island up here. Let me just go like this with it. It's like this island is there. But let's move that down like that. They built that island. I'm just going to make it yellow, just for the fun of it, like that. The island is there. It doesn't seem to want to walk away from that island. It won't go after the 105. We've been up around the 106s. I got to read something. I got to read the internal data. Because I want to see, I got to see what they're saying. Because there must be some internal data now that's been taken apart. Let's see. Internal data. There we are. Okay, here's some information from Double Line Investments. Commercial real estate loans with delinquent payments jumps 6.5%. MBA outstanding commercial mortgage debt hit 4.7 trillion in fourth quarter. That's Don Peoples Corporation founder. Commercial real estate foreclosure up 117% year over year. I guess they're getting, that's real pressure starting to aim at lowering some rates. U.S. office building debt hits $117 billion in 24. Commercial real estate market outlook. Yeah, they really need to bring the rates down to be able to save some of these real estate investment things. Let's see. Double Line Capital fears of ravaged commercial real estate market have eased. Okay, well, that's good. All right, let's see if we can find any other story about initial continuing jobless claims continued to ignore reality. If Trump wins in November, will all this data suddenly be allowed to reflect reality? I guess they're having some doubts on the numbers. We all are at this point. Let's see. No, let's see. U.S. futures tumble after Facebook. We saw that. GDP data on deck. Let's see what the GDP data on deck. Okay. Wow. Those numbers are, I was really looking for 3, not 1.6. That's putting a chill into that action. They got to lower rates. I guess the market is like accepting the idea that we're not lowering rates. I guess that's what it comes down to. Let's see. The market consensus forecast, GDP, right, 2.5 over the quarter, and actually released data revealed growth of only 1.6. So with U.S. sentiment indices and the signals a slowdown. Okay, that's all. That's the same stuff we read before with you guys. Okay, that's fine. Now I'm going to look at the Dukascopy calendar and just get a flavor See if there's any data in there I can spot. Trading. Just copy calendar right there. Alright, so let's see, here we are now. Today is Wednesday. Durable goods. Durable goods, durable goods. I thought GDP was tomorrow, but I guess I'm wrong. All I'm seeing is I'm a little confused here. Friday, personal income, the PCE, right? Yeah, core personal consumption. Okay, so that is Friday. All right, so now let's go to Thursday, tomorrow. Tomorrow is personal income also. And then today was GDP. Okay. Trade balance, gross domestic product. 1.78. What was forecast? No, that's jobless claims. Income, claims, initials, continuous job, gross domestic product. It's not filled in yet, I guess. They're not showing us that. Forecast, previous. So I'm not seeing it on the calendar. Okay, it'll come out. I guess they'll put the data in there soon. I'm just trying to see the actual internals. All right, we're going to skip away from that. We'll keep on marching. But at this point in time, I would imagine currency traders are having a hard time figuring out what to do. You know, because it looks like they should lower rates now if gross domestic product is getting smacked like that. Let's go over and look at, there it is right there. You can see, you know, there's the euro on the screen there. And let's take a look at British pound. British pound was starting to outperform again. See, that's still plus. That's 3 days in a buy. And that's below the manifold too. They're having a hard time getting these things to longer term investors, or let's say week to week traders versus day to day traders are not exactly comfortable with the markets here at this point. Yeah. Huh. Boy, that's really something, that statement. Initial and continuous jobless claims continued to ignore reality. Wow. That is, let's see, what are they saying? In the real world labor market, 2024 has been a blank show, layoffs. Eventually, 100% workforce. Huh. That's not pretty. What's the green line? Huh. Yeah, it's not, what is this? But here's the thing, warrants are soaring. And Challenger Gray just announced that March saw the most job cuts since January of 23, but government supplied data on the initial jobless claims continues to smoothly tick along near record lows. Huh. That's why they're all freaked out. The number should be drifting. It should be drifting down. That's why. All right. Now from there, we dance our way over to the Swiss. Let's see what the Swiss. I was really surprised yesterday. The Swiss was losing against the dollar when both the cable and the euro were gaining against the dollar. I was really surprised about that. That had me a little surprised. It's like smart money is saying no. That's what the problem is right there. I always think that Swiss currency represents more smart money than other places, and so that's somewhat concerning to me when I see the Swiss going in the opposite direction of the euro or the cable, I start to wonder, is there problems around the corner there in the currency, and the dollar is going to stay strong? And you would think the markets now with these type of numbers would be anticipating a cut better than usual. I mean, that much of a drop on the GDP, I was expecting a fudged number of strong. Well, maybe, I guess what it comes down to is that maybe Biden and the Bureau of Labor Statistics finds it better to make the GDP go down to push for that. They want an interest rate cut. They're begging for an interest rate cut. They need it. They thought it was going to start in November to December of last year. Here we are getting ready to go into May, where they say go, sell in May and go away. I mean, I'm sure this is not what the administration is under in the political polls everywhere. And the problem is that they thought they could put Mr. Trump in court, and that would give Biden a chance to campaign better. But Joe doesn't do a good job about campaigning. Supposedly yesterday he was reading the teleprompter, and when it said, after his speech, it said pause, he turned around and yelled, "Pause!" So, it's like, oh my goodness, he doesn't even realize he's reading the directions on the teleprompter. So, I guess what it is when you put him out in front, he needs to be in the basement campaigning, because if people see him, his polls keep on going down. So maybe they figure they're doing a double sword thing here. They're going to push the the GDP down so that they can get their interest rate cut. All right, now from there, there's the Swiss. You can see the Swiss there is pressing through and still moving up. 4 days in a buy and 13 weeks in a buy from the 85 area. But I'm not that concerned. We're not looking at like 97 now. We're looking at 91. I thought it was way overperforming when it went down to 83.5 on the Swiss. So sitting around, to me, the norm should be around 88, 87, 89, right around there. So now that they're tightening things up, 91 is not like the worst thing in the world. It's not bad at all. All right. From that product, we go over to, I heard the yen's over 155. I haven't looked at it, but poor yen is heading for 156. That's the highest it's been since like 1992 or something like that. We're looking, or 1990. I'm sorry, 1990. So there's I don't even know how to describe it. But one thing is very clear is Mr. Trump came out 2 days ago and said that the Chinese yuan and the Japanese yen are being manipulated very aggressively. And so they used to give out those manipulation numbers. So they're obviously, even as a campaign, they're still paying attention to all the economic statistics. Remember Mnuchin, the Secretary of Treasury, would come out at the end of every quarter and let us know who was manipulating their stock more, or not their stock, their currency more than anybody else. So that was a really interesting thing. They didn't give us a lot of guidelines on it, but they just kind of made it clear that's who they saw as manipulating at the time. All right, let's see. So from there, the yen, it's up above the manifold right there. The manifold is actually widening now. That's not a very good sign. You see, when it's widening like that, it's still rising. When we go over and tighten it up here, and you go like this, and you see the, I'll show you the last time it was contracted down to this level. It was sinking. But when the histogram is plus, like right here, and the manifold, well, right there was going sideways and down. But when it starts to turn up, it goes up. And then when the histogram and everything break down, and the manifold starts to contract or go tight, it usually moves down. You get that movement there. And then when the histogram gets back into the plus side again, and the manifold starts to flatten out and starts to turn up, you get this action. You get this strength again. So the yen is definitely having, it's having it. Whatever that is, it's having it. Let's take a look at the Nikkei. Just a real quick look, just in case we don't get around to the stock indices around the world. I want to see where the Nikkei is. Where's the Nikkei? Nikkei. There it is right there. And let's put it up on the screen. So they were up yesterday, but down today. It looks like they were in a. Did they make it into the buy there yesterday? Let's just make it bigger. That's all. Yeah, so they made it into the buy 3 days back. So, and you saw that action right there. It went up. But today, with it down like that, we're probably still in the buy, but slimly. Now, whereas overall, we've been in a weekly sell now for 5 full weeks. So obviously, you don't try to get long in that little short-term buy on the daily. You just adjust your position so that you're not punished for the move up, and then you can slide back into the sell as it drops down below again. All right. So from there, we're going to go back to the Turkish lira. And there it is right there, the Turkish lira. And you can see, what do we see there? You see it's just drifting up. No real wild moves of 3 and 4 handles. Just kind of chilling about a half a handle. It's gotten quiet. Now, just looking at the weekly, you can see the fast algorithm right there is going back into the plus side. So all this weak movement that the selling down, was pretty much portrayed very clearly with the fast weekly algorithm. Same thing with the daily. We went into the daily on a short term down. Then we started to pick up, and it was this wild swing in here that put us into a sell for a day, just one day, and then back. So to a great extent, 1, 2, 3, 4, 5, 6, 7. 6 of the last 7 days it's been in a sell. No, I'm sorry, it's been in a buy. It's a green line, that's right. So it's been in a buy. So the weekly, as much as I thought it was going to make a challenge to it this week, I guess if we keep on drifting up, it'll help it. But it's trapped in between the manifold, so it's something to pay attention to. I think we're in the 33rd week of a weekly sell, so it's on the spreadsheet there that I send out. So it's definitely having its issues. I'm happy for it to just, if it would fall asleep in this area here for a few years, I'd be happy. I mean, I know that the population of Turkey would be happy. No more wild moves. Just stay down in here in the 33s, 34s. Just hang out there. That's fine. And then maybe if the economy starts to grow, then they would have a better currency starting to move back down again. It's funny when you look at countries like that, and then you go look at something like Poland or Israel, and you look at some of the way their currencies are trading, and they're so stable. Just so stable, and they're good, healthy economies. So you got to wonder, when is Turkey going to join in with that party? I mean, they got a population, they got resources, whatever economic theory they're running on it. Just go look at Poland and Israel and just try that one. Maybe it'll straighten things out, inflationarily. All right, from there. Let's see, where are we at? So that's, from there we're going to go to the kind of like the metals world. What we do is we look at the South African rand. Oof, look at that, nice. They're pounding it down today. That's nice, and it's even trying to push into the sell. I mean, it's been in a buy since here. Let's grab a green line, just move it over like that. It's been in a buy since there, and now we're finally making a flirting move into the sell. I like that. Let's see if we get a sell out of that. Matter of fact, look at that. The weekly is just on the edge, 0.0006, and now it just ticked down to 5. So we're seeing some positive action out of the South African Rand, which would say to me, I know when we sent out the metals charts this morning, they were all, trying to lift up. They were definitely showing some good action there. There we are. There we are. So from there, let's check out gold. I know gold was up. Let's see right there. And not exploding yet, but you never know. During the day, we might get much stronger. You see that there? We got a little red dot. Maybe we'll push the red dot out and we'll get into the buy. We're in the weekly buy. You can see the fast algorithm has dipped underneath at the moment. It's below the 0 line. So we're seeing a little pressure, just as much as we saw the daily pressure. And but the weekly, you can see the histogram has dropped underneath the manifold. And you can see here the green is trying to roll over. It's heading down. We'll see if there's more weakness that comes in over the next 2 days. 2-year treasuries are trading at 5.02 yield. 5.02 yield. Cool. We'll take a look at the bonds after we get done the metals. From there, we go to the silver. And silver looks just like the gold. It's trying to lift up a little bit. And you can see the fast algorithm flirting on the edge of minus. Right on that edge. It's not there yet, I don't think, when I click on the... Oh, yeah, it is. It's through there. It's -8. There we go. So pressure is on there. The green line is way above the manifold, so it's not the worst thing. And the white line is just about touching the manifold still, so... Oh, Supreme Court hearing on Trump immunity today. Okay, that'll put some... If they... I'm not sure when they announce, but if they say, yeah, he has immunity, which they have to say, because if not, then we'll lose our presidency. The presidencies will be just ceremonial. No president will be able to make any real decisions anymore. So, it'll be a weak executive without immunity. Democrats don't even... I don't know if they know what they're really doing. Do they realize they're trying to actually change the immunity situation? I mean, I guess what they're trying to do is make the president almost worthless, and then just have the Senate passing laws, like a parliament type thing. I guess, I don't know. That's pretty much it right there when it comes to silver. Now let's take a look at platinum. And there's platinum. Platinum is just pushing down. Interesting. It was greener this morning. I could have sworn it was. Let me just take a look. Let's see, which one was it? Platinum, right? Yeah, let's look at that. I'll show it to you what I'm looking at. Yeah, there it is. This morning. See? It was green about 3 hours ago. And it wasn't pushing through or anything, but it was green. The dot. It was a green dot in there. Now, you can see we have a red dot. Let's see. Okay, now from platinum, we'll take a look at the copper. And copper is moving the same exact way as gold and silver. They're pushing it up. All right. Okay, so That's the metals. Let's head over to, where do we head now? Let's go over to the energies. And there is crude oil right there. Drifting a little bit down. I think the 10 o'clock number, we have a number that comes out at 10:30 actually every week on Wednesdays. So that'll be interesting to see. You see, we're flirting with that weekly sell, acting like as if it's going to be in the minuses. And I did mention yesterday that Mr. Biden has said he's going to start taking from the reserve again. It's down 40 some odd %, and he's going to take more. And so, to try to calm the energy costs out. Yeah. Yeah, that's what could be doing this right now. Also, things have calmed down a little bit in the Middle East. We'll see. Now they're just making noise on our campuses. And I understand Princeton and Harvard are going to be getting tent cities soon. So I might drive over to see what the Princeton tent city looks like. Might get myself a sign that says eradicate Hamas and walk around on the campus with it. Eradicate Hamas. I like that idea. I might just go do that. I'm trying to think where they're going to put the tent city there. I know where they'll put it. Okay. Yeah. I have an idea where they'll put it on the campus. Okay. Anyhow, that is the action we're seeing in the energies. You can see that. We'll put it up over on the beta at the same time. There it is on the beta. And let's see what the weekly's doing. Weekly's really drifting low. Really drifting low. Interesting. Really drifting low. That's the 25th. Okay, so they got that. It's starting to tick. And what else we can say about any of these things over here? That's crude oil getting ready to break into the sell. Now let's take a look at Brent. Brent has been more truthful than the other products as far as I'm concerned. You can see here, this is a weekly. It's 10 weeks in a buy. And last 2 days, Brent has really pushed up more. Out of nowhere, Brent had led the market down, and now all of a sudden it's trying to turn back up. I would imagine that when you see a distortion like that, it has to be Biden pulling oil out of the strategic reserve. I think that's what that comes down to, because that's world oil in a sense. It's coming out of the ground, and West Texas is like a ball of everything. The whole structure in the United States. So in other words, oil will be cheaper in the United States, not because of cheaper oil out of the ground, because we know that he's stopping the drilling. It's more of that he's pulling it from the reserves. So I'm sure we'll end up seeing a stat. Someone will get it out the door. Sooner or later you see it when he pulls shenanigans like this. Someone kind of goes, oh, look at this, like the Army Corps of Engineers or someone like that goes, oh, look at this. Now they're getting very dangerous. They can only pull so much out of that reserve. It still has about 200 million barrels in it. But the problem is that there's a structural problem. In other words, it's used to having so much, you could have a collapse when you pull that much out. So you'll be drilling into that. All right, from there, let's go over to the natural gas, which seems to have done a real flip-flop. Look at that. Yesterday smashed down. You see that right there? Natural gas. Now, I would assume when I see something like that, I think, oh, that must mean that they're drilling more. But I know for a fact they're not drilling more. Maybe they did pick up a little more drilling because people are turning on pumps of places that weren't selling it before that are doing it now. So I guess that's the answer to that. The fact that we've gone down and touched the 106 again, or 1.6. And you have to wonder, oh, what is the cost of it in Singapore? That's the big thing, I mean, that's the one that really catches my eye all the time. Is like, what is the cost in Europe, and what is the nature of oil in the world, when I see Brent go up and then U.S. go down, and at the same time I see natural gas going down. Usually natural gas goes down when you get a lot more drilling. So that's the only thing that has me a little surprised and a little confused. See, not there, right there. That's the one we want. Let's see, right there. And I'm trying to get the. See, I want to put another stock index in. I want to see the Shanghai index. Let's see, there's Shanghai Gold, GH. Let's see, Shanghai stock index. Stock. Let's see, Shanghai. Let's go with index. Man, I think they're saying that they've taken it private. I'm a little confused. I know it was around the 3,000 area. Well, let's see, markets. Let's see if we can do this. Markets. World indices. Shanghai. Shenzhen. We have the Shenzhen. I want the Shanghai. Hang Seng is Hong Kong. I've been calling that the Shanghai, and it's not the Shanghai. So what have they done here? Let's see. What have they done? Where is the Shanghai? I see it on the financial channel. They have it, but they don't. It's like they made it a little bit harder to spot in other places. So the only thing we have really is the Shangzhang. Is that it right there? Let's see what that is. That's it. There it is. I got the symbol now. Okay, let's put that in, because that's what I really want to see, is the Shanghai stock index. Let's see. We got here. Yano says that would mean having Biden again. What do you mean, having Biden again? Yeah, they're really whacking on the stock markets, though, aren't they? Let me just put the Shanghai thing into the stock index. Yeah. Let's go. Let's see. Where's the screen at? Let's just put it up. Let me just put it up on the screen while I'm putting the Shanghai in there. Yeah, look at that. And smack-a-doodle again. Boy, those numbers must have been really ugly. Let's go like that. There's that. So then if I go like this, that is, they're not happy. They're definitely not happy with the data. And maybe they see it as fudged. That headline was not a good headline I saw on Zero Hedge about maybe when Trump gets in, there'll be reality again to the numbers. They must have fudged a lot of numbers, to get it to go down like that, because that headline. I thought that's an odd headline for them. I mean, they come up with headlines and it's okay, I mean, it's like, yeah, all right, but that was definitely one of the weirder headlines we've seen in a while. Okay, let's go like this. Let's see if we get that in there now. Copy. And we'll put that in the ticker. Paste. Save. Let's see what happens here. We're going to give it a swing. Like that. And then we're going to go down to it right there. That's the Shanghai. Good. There it is. That makes sense now. Yeah, there it is. 3,100 and so forth. So the Shanghai is popping up today. And it's been in a weekly buy. That's excuse me. It's been in a weekly buy, but it's more of like a sideways action for weeks. Down in the 3,000 area. It was down there 3,000 area in March. In February, dipped underneath it April 14th. And but it's just kind of trapped between 3,100 and 3,000. Okay. All right. Now, you know what we didn't do? We didn't look at the energy stock in Spain. Let me just take a quick look at that. Oh, you didn't see what I just looked at. Okay. Here we go. Here's the energy stock in Spain. And it is moving down a little bit, but I'm really surprised how it got trapped up into the 23s, up to the 24. That to me, I thought things were really getting better. And then look at it. We went into the weekly buy 3 weeks ago, and it just started lifting from the 21 area, 20 to 21 area 3 weeks ago. Back here at 20 area. Because we went into the buy on the 15th, and then the 15th is right here. So it was like just right in this area here, the high 20s. And it ran to 24. Whew, that's a real big surprise to me. Now we can go take a look at, we can look at that stock indice again. On there, you can see that they're just, just having more and more problems. And you can see all of them. There's the bigger one for the day. It's been in a sell now since the 80 area, basically. So it's been in a sell for 43 handles. And that what that is on the S&P is that's a 630 tick. I think if you put a 6 million tick up, or 6,300,000 tick for the SPY, you'll get the same type of thing. Let's get back to over here and just take a good look at what's going on around the world. We'll start off. We saw the Nikkei. The Nikkei was kind of bouncing around again. Let's just take a quick look at the Nikkei again. There's the Nikkei, and the Nikkei, pressed down there. But you can see it was in a daily buy the day before, but the weekly's been pressing down. Let's see what the Kospi is right there. Kospi is 4 weeks in a sell, and it was in a sell 2 days ago, and then yesterday it tried to climb in, but notice it was half and half there. And you can see here it did a little pop up and is pushing down again also. So we're seeing pressure on the stock indices there. From there we go over to the Taipei. There's the Taipei. On the weekly, it's been 2 out of the last 3 weeks. It's been in a sell, and you can see here yesterday they took it up hard on the upside, and it's down today, but it's probably still in the buy. From there, we'll go over to where do we go from there? Let's take a look at the Shanghai market right there. That's it. That's better. There's a Shanghai market. It's 3 weeks in a buy. And we talked about that. It's like in this channel right here that's going sideways. From there, let's see. 10 a.m. Oh, there's going to be more fireworks today. The Supreme Court's listening at 10 a.m. against the immunity thing. They got to give immunity, or we're not going to have a presidency ever again. There'll be no presidencies in America. This is insane. It's not constitutional what they're doing to begin with. They'll probably tell them that. It's not constitutional. You can't sue them for policies. Litigating society. Democrats love to litigate. All right. Let's see what Hong Kong looks like this morning. Woo! Look at Hong Kong. The Hang Seng is moving up nicely. Yeah, moving up very nice. And you can see here, daily wise, it's been in a daily buy for 7 days now. What a rip from the 16.3 area, 16.2, up to almost a 17.4. Nice. And we're 2 full weeks in a weekly buy in the Hong Kong market. From there, we'll shoot over to bada bing, bada bing, bada bing. Let's see. Let's go look at the Nifty 50 out of India. NEIS. Where are you? There it is, right. The NSEI. There's the Nifty 50. The weeklies have been in a buy like 6 out of the last 7 weeks. Is that right? No, five out of the last 6 weeks. 3 weeks straight now. We've been in 4 days in a buy. You can see it's lifted up, and today it's popping again. It's a little confused, but it's still popping. They're showing the strength in there. Then from there we'll go to the all ordinaries, and pretty much Asian markets are all over the place. But you can see India, Australia is up 3 days in a row. You can see 4 days now in a daily buy, and you can see interesting 4 weeks in a sell. So it's real trap. And it's dead in the center of this range, of whatever range that is. What it's all about. Dow's down almost 500 points now. Boy, I'm telling you, there's. I haven't heard the news. I can't wait tomorrow for the webinar to be able to talk about what they're doing to it today. Why? They must have seen some internal numbers really bad. But like I said, one of the stranger things I've seen in a while is the way. I mean, Zero Hedge is a financial. Like a Twitter in a sense, or a spreadsheet of some form. It's like an odd combination, right? But here it is. Now we're getting it. Stagflation shock. GDP stuns with lowest print in 2 years, below lowest estimates, as PCE comes in red hot. Even more bad news for Biden. That's what it is. Okay, it's really reflecting the stagflation. That's what it's doing. Okay. Stagflationary GDP data sparks market turmoil. Rate cut hopes crushed. That's why we're seeing the currencies act the way they are. Okay, so in other words, what happened was the data came in, I guess when I don't know, I want to say this, with the way the administration has been working, okay, the way they do things, they probably thought, and this is classic with them, I mean, this is repeated over and over again. What they probably thought is if they could fudge the GDP number down, they can force the Fed to raise lower rates. But by doing it, they probably ignited the stagflation number. And they probably didn't think about that. And they do that type of thing too. Whenever they make a major decision, there's always something. There's always something that goes wrong. In other words. When they left Afghanistan, they left $85 billion worth of equipment there, and they abandoned our major base there. And in other words, $85 billion just left. And it's dangerous equipment. It's equipment that's being sold and used by terrorists around the world. They found some of that equipment with Hamas even, and so there's serial numbers on these things. They know what they are. Okay, so every time this administration tries to fudge a number, it has a tendency to shoot itself in the foot. And so they fudged the closure of Afghanistan and instead pissed off America by having like 13 soldiers die at the same time. And they left $85 billion worth of equipment there. And it's like, it'd be one thing if they had left, but they took those things and kept the base. But to lose all of it, see, they do that with everything. Every time they do something, they fudge something that doesn't fit with the narrative. It's like they're two-dimensional instead of three-dimensional. It's very strange. My title today is going to be, what's the title going to be? Here we go. Let's look at the chat line there. Yeah, there's no other questions. Okay, so the title today is going to be BLS data is transitory. And that's pretty much what it comes down to. That's the problem, is that whenever they play with a number, they wreck it. They make it dysfunctional. So they don't get what they want. In other words, if they want to make it look like, okay, it's safe to lower rates, you can't manipulate a number that's going to take stagflation and make it look gigundous, big. You can't do that stuff. It's stupid. So, all right, this is the title today, and that's pretty much what the answer to it all is to begin with. Is that Let's see. How do we put it here? Let's see. Let's see. How do we label this? BLS data is fudged. And that's pretty much the attitude about it. That was the first headlines out of Zero Hedge. It's like the data is all screwed up. And that's going to be the title. And that's what the problem is that there's other numbers that reflect that Zero Hedge had it. They had a chart up showing what they thought was all screwed up out of it. Here it is right here. I'm going to bookmark it, and then tomorrow I'll show it to you. And what they do, matter of fact, I'm gonna put it up on the screen now. You know what? I'm gonna put it up on the screen now. Let's put it over here, and then I'm gonna use that as the closing picture. But that's what the problem is they see numbers being fudged, and I'll show you where they see the numbers being fudged. Let's see, where the hell is it? So I go like this. Put that up over here like that, and then let's put this up on the screen. And that's what the problem is. That is exactly what the problem is. They recognize that right from at the beginning. Here it is. This is the one they're really freaked out about. Let's move that over. This is what the problem is. They find the green line, U.S. initial jobless claims, too flat. That's what the problem is. See the green line there? And then this is like all the U.S. worker adjustments and retraining and notifications, and then challenger U.S. job cut announcements. Right? That's what these lines are. And the red arrowed lines right here. Let's see if we can do this. Right here. This is what they're upset about. This is what Zero Hedge is complaining about. The green line. The initial U.S. initial job claims are too flat. They're not functioning like with the rest of them. In other words, they barely. So remember I've told you they've turned the Bureau of Labor Statistics employment numbers into like a stochastic. It can only go to 0 to 100. And it can't go out. So it stays inside of it. Instead of it like a moving average where it can go to, 190 or 380 or minus 20, a moving average, they're measuring it through a stochastic now. And by doing that, it's locked into a low range and it's not reflecting. So in other words, when all this other stuff is running up to 800, see it over here? That's where the mouse is at. Where's the mouse? There it is right there. So you see it right here. When it's running up to 800 here and so forth, the thing is trapped down here in the twos. It's because the employment numbers are trapped in a stochastic and the rest of them are in moving averages or actual live data. They've smoothed it out. And that's why Zero Hedge has. Let me see if I can show you the initial claims. Oh, that's it. It's right underneath it. Okay, here we go. Let's see if we can pull this up. Here it is, right there. And there's the title. Oop. Let's do it this way. We're going to make it smaller, and then we'll get out of here. There's the title of it right there. That's the title. Initial and continuous jobless claims continue to ignore reality. That's why they were freaked out this morning from the numbers. That's the answer to it right there. And that's why the BLS numbers, we've been saying this for years. Matter of fact, I thought at one point Mr. Trump was running the economy so well, I thought honestly employment numbers could go to 0. Maybe go minus, like the way oil went minus. So, anyway, we're out of here. This is Doc from North America. Catch you all tomorrow, same time, same channel. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends.